Hi and welcome to our May 2023 fund update. I'm Steve Johnson, Chief Investment Officer at Forager Funds, and May was a good month for both funds, particularly our Australian Shares Fund, where we managed to eke out a small gain in a month where the market was down almost 3%. There are a few companies in the portfolio that were reporting their results where they have a March year end. Gentrack, Catapult and Plenty being the important ones, and it was Gentrack that was the real standout performer. This utilities technology business, it's a billing software system for utilities companies, predominantly in New Zealand, Australia and the UK, reported some really good results for the year, and management are particularly bullish about the coming couple of financial years ahead of us. This stock has been an outstanding performer over the past year. It's up some 160% or so, and was up again on the back of this result during May. We've taken a bit of money off the table as the share price has risen, but it is still an important investment in the portfolio, and I think a really good example of the operating leverage and share price returns that we're hoping for from some of the other profitable tech companies in the portfolio too. The Forager International Shares Fund returned a touch over 1% for the month of May, which was only a little bit better than the index. But given the mega cap tech stocks that have been driving that index, it was a relatively good result. And as I'll touch on in a moment, driven by some good outcomes in some of our small cap stocks. For the market though, it was the mega caps driving returns, and particularly chip stock Nvidia, a key supplier of components to generative artificial intelligence companies like ChatGPT. Their revenue, profits and guidance blew away market expectations in May. The share price was up a lot and dragged a lot of other large tech companies along for the ride. This is one of the narrowest market rallies we've ever seen in terms of the number of stocks that are up versus a swathe of stocks that are not participating in the rally. The fund did pretty well though, particularly because of a couple of results from companies, the most important being Norbit, a Norwegian small manufacturing company that we've owned since its IPO back in 2019. They put out some pretty bullish expectations or hopes for this company a couple of years ago. We were somewhat skeptical about those, but liked the investment in any case. They've blown those expectations out of the water and are well on track to hit their 2023 and most importantly 2024 and 25 guidance. That share price has almost trebled since the IPO back in 2019 and been a really important small investment for the fund that has contributed to returns over that 3-year period. And in the US, open lending, which is a stock investors have read quite a bit about over the years, go back to our previous reports if you want to learn more about the business. That share price was up 44% for the month, despite reporting its worst quarterly result for the past couple of years. Its share price has been absolutely walloped, particularly over the past 18 months. Expectations are very, very low, and there was a fair bit of evidence in this company's results that we have seen the worst in terms of this business, and it still remains a incredibly profitable business with margins close to 50% of revenue. So investors are convinced that the worst is in. The share price was up 44%, and we think that is pretty emblematic of what we can see at this small cap end of the market over the coming years. There are some very low expectations around what we think are good businesses, and sometimes you don't need lots of good results for things to turn, just an expectation that the worst is behind us. End of financial year coming up in June, so we'll be out in early July with our end of financial year performance reports and the quarterly reports as well, with a couple of new stocks to talk about to investors. Thanks for tuning in, and we'll be back next month.